Hello and welcome to Market Index and Live Markets C-suite coverage of reporting season. My name is Carl Capaliwa and I have the pleasure of chatting today with the Pilbara Minerals CEO Dale Henderson. Dale, thanks so much for joining us today.
Thanks, Carl.
Dale, your company has just reported its first half results. What would you say are the most pleasing aspects of the company's performance in this period?
Well, it's been a great half, strong operating performance and all major projects basically on track, schedule and cost. So yeah, really fantastic half in terms of what we can control. Of course, it's been in a softer pricing environment, but in terms of what we can control, we're really happy.
Yeah. Look, you mentioned what you can control, you mentioned prices, and so much has changed in your industry since the start of this reporting period. Is there anything maybe the company missed or didn't achieve in terms of the goals you set out with on the 1st of July 2023?
No, we're pretty happy with how we're going. Coming into this financial year was all about building the base, building out our production capacity, so very much projects, whilst of course continuing to deliver low-cost tonnes, etc. That's all gone well, so pretty happy with how we're travelling.
One of the biggest stories in global commodity markets over the last 12 to 18 months, of course, is the fall in the lithium price. I've seen many research reports which suggest we're pretty close to a low, but also a couple that predict maybe we could get down as low as US $600 a tonne for spodumene concentrate. If that were to occur, how would Pilbara Minerals manage that sort of price volatility?
Yeah, sure. So there's plenty of speculation as to what does the outlook look like. Look, what excites Pilbara is and always has excited us is the long-term prospect for the industry. The grassroots investment is still incredible globally, so we're keeping our eyes trained on that prize and hence getting on with the job in terms of building out the base. So we're looking through the short-term volatility and pricing for this long-term opportunity, and if history is anything to go by, it could go very well for Pilbara. Pilbara's been in this new industry a little bit longer than most. We've had the challenges of a low cost environment previously. We then swung out of that environment having built out production capacity. Previously it was through the Altura acquisition, but we had the perfect storm in terms of increased production capacity moving into a high priced environment. So the last 2 years have been, for a lot of our shareholders, just a fantastic period. We're now in a period where lower pricing, granted, but as we say, the long-term trajectory looks pretty positive. So we like the idea of continuing to build out our production capacity, and maybe we'll have deja vu, who knows, but we like the idea of more production capacity, improved pricing, and Pilbara's shareholders should benefit from that.
You're still very much a one asset, one commodity company, and let's face it, Pilgangoora is a world-class asset. But is this something that concerns you? Are you looking to address this issue of diversification?
Yeah, look, diversification, it's part of our strategy. We describe it as sort of our fourth plank to our strategy, and I often characterise it as a distance fourth. And the reason we call it distant is our priority around expanding our base asset is the quickest route to create more value for our shareholders, given the great asset that you mentioned and the ability to exploit, we think, this incredible market which is unfolding. So that has the priority and certainly the weight of the business's focus. That being said, diversification, it makes good sense for Pilbara to look to diversify in time if and when the right accretive extensions are identified. As to where and what they are, well, that's all questions for another day. But as I say, priority is really on the base asset for now.
Yeah, well, in terms of where and what they are, I might try and get the question in today, if you don't mind. But look, it's not just lithium that's impacted by the current cycle. Many commodities prices have fallen. And it tends to be a bit of a double-edged sword because you have companies like your own, which, as you say, have been around a long time. It's not your first rodeo in terms of dealing with these low prices, and you've got a good asset and a low-cost asset. On the other hand, you've got companies, and they're probably too numerous to mention in this interview, who are struggling.
Yeah.
Are you seeing substantial mispricing of assets, not just assets, but potentially going concerns in the market at the moment? And are you actively looking to pursue these opportunities?
Yeah, it's hard to make a comment on particular assets without getting into the specifics.
Sure.
But I think I can generally say we had a period of lithium fever, I think,
Yeah.
and no surprise given the very strong pricing. A lot of groups looking to enter in every way, shape and form into the industry, and I think through that sort of chapter there has been some assets and businesses which have been overpriced, and now we're entering a different phase, one in which there's been some resets, I think, emerging. Now, does that present an opportunity for Pilbara? Well, potentially, but it depends on which asset and where. But yeah, as I say, for us, really focus is carry on with the job, low cost operation, build out the base, see through the short-term volatility for the longer term prize. So that's what sort of garners our focus.
Yeah. We do, a market index, we do a weekly short seller report, right? So we just get the ASX data and we list them from top to bottom. Now, Pilbara Minerals has been on the top of that list for a substantial period of time.
Yeah.
Do you have, I know you've made some pretty spicy comments towards short sellers. Do you have any further comments for the short sellers after today's results?
Yeah, not really. I mean, as you may have heard, as it relates to our short position, being top of the podium is obviously not what we aspire to be for the short list. But as it relates to lithium, we're not alone. I mean, we're the largest lithium pure play on the ASX, so we do kind of stand out. What we hear is those short sellers are applying their expectation of the market movement, not so much Pilbara's business performance. And as I say, we're not alone, and when we look to other markets, some of the US markets and other lithium-centric businesses, some of them are fairly shorted. So we're in good company, so we know it's not so much a Pilbara thing, it's more of an industry thing. So that's one key distinction. The key thing I've really spoke to in this space is, I've used the word, it's brave to take a short position, in the sense that this industry is young, it's growing quickly, and it's had a tendency to surprise, and we have seen in particular price movements move historically very quickly, very rapidly, and if what's occurred in the past happens again, that could create a situation of a very strong short squeeze.
Yep.
So any short seller should be cautious of that dynamic, and of course cautious to bet against Pilbara. We're very focused on delivering well. We think we've got this fantastic asset, proudly great homegrown Australian company. We want to continue to extend our position, so we're incredibly focused on delivering well. So, and we look forward to creating more value for our shareholders.
Yep, no doubt the shorts are listening. Dale, if you permit me, I threw the prospect of interviewing you today out to my Twitter followers, and I've got a substantial number of, let's call them Pilbara Fanatics, that do follow me.
Yeah.
And it is a very popular company, both among my followers, but also on the Livewire Market Index platforms. It's one of the top 5 searched companies. So the top questions that came through for you from the Pilbara Fanatics, by far and away, the biggest one was dividends.
Sure.
Okay, so obviously we know no dividends for FY24. You've discussed some of the reasons why, but can you tell us when you think they might be coming back?
Appreciate the question. Yeah, dividends, it's a function of our capital management framework, and which sets out effectively how excess proceeds can get channeled, which of course return to shareholders is one of them. And yeah, we got thrust into dividends fairly quickly in the growth journey of the business, which was a fantastic thing given the strong pricing environment we found ourselves in. It made good sense to get some dividends done and out the door, and great to give back to many of those shareholders, many of whom have supported us through the tough times. So that was fantastic. Obviously, the pricing period we're moving through at the moment, that's come back. So the margins have decreased. Hence, we've taken the decision to not effectively pay dividends in this environment. But what we are doing is continuing to build out the base, because we actually think the best use of our shareholders' capital is putting it back into the ground, increasing the base asset, expanding and extending our position between us and our competition, such that when improve pricing returns, well, we'll have a larger production base, and if that's times by some really strong pricing, well, I like the idea that we'll have more dividends to pay back in due course.
Sure. You mentioned obviously building out the base, and you have said in your analyst interview that there's no plan to cut production anytime soon. The goal is to get it out of the ground and get it to customers. But again, followers they want to know not so much about production cuts, but what price would you start to perhaps not continue to ramp up that supply? Where is there a point where you would just tail off?
Yeah, sure. So the way we think about this is, in the first instance, what's the benefits of continuing to carry on with the expansion? And with that, there's quite a few. Building out the base supports us in a couple of ways. One, it reduces our operating cost, so that makes good sense. Two, it obviously positions us with a much larger production profile, such that if pricing returns, and I mentioned sometimes pricing turns quite quickly, well, we'll be in a position to yield the benefits of that. So creating that opportunity is important to us. And the third piece, which is more of a practical element, is we're well into construction. Concrete's coming out of the ground, and the photos we showed today on our release sort of show it's literally coming out of the ground. So those couple of things sort of guide us to carry on with that. But let's just say we've done the build. What do we do then? Let's just say pricing's mooted. Well, we still have available the ability to moderate production if we chose to. We could potentially scale back the outright produced tonnes if we chose to and re-optimise the mine plan. So those levers are still available to us, and we'll retain those levers. If pricing got low enough, well, of course we could deploy that, but we don't see any reason to consider any of those at this point in time. And I would just add, these set of levers, we've been here before. You know, the price decline we had through 2019, 2020, well, we had to pull all of those levers. So we have the playbook. It's not our first rodeo. We've got our eyes trained on the prize, and it's onwards and upwards.
Yeah. The final question, which I thought was perhaps the most interesting one, people want to know about how you feel about unconventional supply coming out of China, possibly one of the big reasons for the current supply gut, but also other lithium extraction technologies. There's hydrogen, there's different battery chemistries. Is this something that you're keeping an eye on at Pilbara?
Yeah, we do keep an eye on it, and it's a big question to finish on. And I'll offer a couple of comments about lithium and then maybe other tech. In the case of lithium, as you know, the world needs a lot of lithium. There's few raw material sources to come from. There's hard rock, there's clays and brines principally. And in the hard rock space, of the available mineral types, spodumene or pegmatite is actually the best source, actually holds the highest concentration of lithium units of any other rock type. And that's why hard rock and brines traditionally have been pursued, not clays and certainly not lepidolite, but when lepidolite holding a very low percentage of lithium. So as it relates to these sources of lithium units, they're higher cost because of their lower concentration, and because of that, any supply from that will fill out the right-hand side of the supply curve. So that's what we believe to be true, and frankly, the talk of some of these mines being turned off at current pricing, I think, is evidence of that. So that's what I'd say about lithium. As it relates to other tech, yeah, of course we keep our eye on it, but we have a high level of confidence around the lithium-ion supply chain for a couple of reasons. One is the build-out investment is immense. So a lot of companies all through the supply chain are effectively committing to that now, and it's well underway. The second thing is lithium-ion battery chemistries are very mature. It's a battery type invented in the 1970s. It was perfected through camcorders, that type of stuff, long before Elon put it into a car, et cetera, et cetera. So it's had that type of runway, and now it's at a point where it's getting scale, and all of that plays through to efficiencies, reduced cost. So it'll be hard to displace. There isn't an obvious competitor at this point, and I want to add one other fact that I think the lithium-ion battery type is particularly good for e-mobility, It's got that right combination of cost, energy efficiency, particularly recharge, discharge efficiency. So some of those things which make it hard to displace. So do I think other tech will come in time? It will, but it's hard to see anything coming too quickly. So long answer, but hopefully that covered the base. It's a big question.
No, it's a great response. Dale Henderson, thanks so much for your time today. Really appreciate it.
Thank you.
And if you liked that interview, make sure you hit the thumbs up button. Don't forget to subscribe as well to stay notified of all of our future updates.